Richard Lambert spent 3 years as Bank of England rate setter. He's also the former boss of Britain's biggest business lobby, the CBI, joins us now. So then let me start by picking your brain, on the business side of things. What do businesses, what do companies want to see from Osborne today?
Well, I think, first of all, they want to see the credibility. They know the numbers are going to be bad. They know that they're going to be a lot worse than they were when he last stood up back in the spring to give his forecasts. They know there's not a lot he can do to change the course of what now is a sort of a global slowdown, but they need to show that A, he's credible, B, he feels that he can do stuff, he's in charge.
You say that there isn't a lot that he can do. I suppose now it's becoming clear with growth forecasts from the OECD, there have been downgrades, that the picture is gloomier than we initially thought. What can he do? Can he do anything to change that? I mean, what are his options at this point?
Well, he hasn't got a lot of wiggle room. The fiscal position is such that he can't and won't say, well, we're going to take the brakes off on the fiscal side. We have an amazingly accommodative monetary policy. That's his best shot that he can keep on that. He can do some changes at the margin, particularly on credit. Small businesses now are being really squeezed on the credit side, and it's going to get worse over the next months as the European banking refinance drama takes place. That's going to feed through into the UK and make credit harder to come by for small firms who create the jobs, so he's going to have to do something to help them. And he's going to have to persuade the markets that he's in charge, that interest rates in the UK can remain low for as long as you can sensibly think.
Just picking up on a comment that you made, what needs to happen then to get that burst of activity, that shot in the arm from small and medium-sized businesses?
Well, I think there are two things. One is that if you look across the company sector now, the non-financial companies have about 600 billion cash in their balance sheet, which is roughly 3 times what they had at the beginning of 2002, for example. They've got a lot of cash. What they need is confidence that says, we believe if we invest now, we're going to get out there and make a good return. If you look at the third quarter numbers, which were broken out by the ONS a couple of weeks back, you saw that business investment has just slowed down completely. His hope was that business investment would drive the recovery.
It's not happening. And the private sector didn't absorb public sector job losses. So
that's right.
Are we in a worse position now than we were a year ago?
Oh yeah, much worse.
Yeah.
And that's partly because of what's happening in the UK. In the UK, the big puzzle in the UK is why is private sector productivity growing so slowly? By which I mean that means the sort of underlying growth rate is slower than people thought, which is why the black hole in the public finances is going to stay longer than people thought a few years ago. So the domestic question is, what on earth is happening to productivity? Why is it so sluggish? And then there's the European question, the Eurozone. Net trade was supposed to be dragging us out of the recession along with private sector investment. Net trade was a drag on growth in the third quarter. So we've got neither sort of a trade boost or a private sector investment boost. Somehow that has to happen before we get going.
It's a grim picture, and when we speak about domestic productivity, Richard, we do have measures. There have been attempts, for example, the £20 billion credit easing scheme for small companies. How much of a boost will that give
I think it will help on the margin.
Yeah?
I think it will help on the margin. I mean, if you look at what's happening now, you look at the spreads that small companies are having to pay, it's like sort of 4 or 5 points over bank rate. And if you look at the willingness of banks to lend to small firms, which are riskier assets. The ONS again put out some numbers the other day that said that they did a survey of growth firms, small growth firms, firms who were growing at 20% compound, and they found that in 2007, 90% of them had their loan applications approved by the banks. Last year, 50% had their loan applications approved by the banks. This year, the numbers are a lot worse. So there is, growth companies are finding it hard to get credit, and they need that if they're going to take people on.
I'm just wondering about some of the specific measures that we might get today, and there have been a number of measures outlined, in terms of getting growth, and then, Osborne is expected to announce tax breaks for individuals investing in small companies, so essentially income tax on investments up to £100,000. Is that the sort of measure is that what's needed here?
I think, to be cynical, Osborne has to come out with a lot of little goodies in his sweetie bag today. I mean, if you think back to March, they produced then a growth review then. It was 126 pages long. Can you remember a single thing that was in it? I can't. So this is the second growth report this year.
Why have they failed to come up with a credible, effective growth strategy?
Well, it's partly because the ground has been sinking underneath them as they've been moving. It's partly that. If you think back to when Mr. Osborne took office in the summer of 2010, then the consensus was that the UK economy would be growing 2.5% next year, or more. It's now 1% next year. So that's partly that. And it's partly that all their energies have been focused on the fiscal side, and it's difficult to produce a growth strategy when the world is slowing.
What about the Bank of England? Are we going to see more quantitative easing in the coming months next year?
I would guess we will, yes. I mean, the message is a little confused. If you look at the inflation report, the November inflation report, that seemed to have more quantitative easing stamped all over it.
Yeah.
If you looked at the minutes of the last meeting, that seemed a little bit more cautious to me. But I would guess the betting has to be there will be more QE in the new year.
Well, thank you very much indeed for coming on. Richard Lambert, former Director General of the CBI.